In this video, I want to cover the topic of health insurance for self-employed people. So there are three options I'll go over. Before we get into that, I want to kind of level set real quick. So I'm talking about options for quite literally individuals or individuals and their families, not companies, not small companies, even two, three, four people. I'm talking about individuals, so 1099s, independent contractors, gig workers, freelancers, however you want to term it. And you need to buy health insurance on your own. That's who this video is for. Second thing, I'm going to shoot you straight. I'm going to tell you the good and the bad here. There are some options that are more affordable than what I might be discussing, but they are not comprehensive, real deal health insurance. I'm only interested in talking about and guiding people to health insurance, comprehensive health insurance, where if something catastrophic happens, something unfortunate happens, you're going to be covered. You're not going to worry about running out of coverage or anything silly like that. So the three options, what are they? The first one's the easy one. It's kind of the gimme. And it's probably the way you should go if this is applicable to you. And that is your spouse or domestic partner has health insurance through their job, and you can join that. Pretty easy. It's probably a group plan. It's probably pretty decent, and you should jump in if you were able to do that. That's not an automatic 100% you should do it kind of answer, but it is an option for you. And probably most people in your situation who have that option take it. One thing to keep in mind with that is, yes, the plan itself, it might be a PPO network, which is the broadest network you can find in the U.S. on a health insurance plan, broadest type of network. That's great, but keep in mind the cost for the plan itself. While it may be subsidized for your spouse in this situation, the cost to add you is more often than not, it's not subsidized. So it's going to be pretty expensive. So keep that in mind as we discuss the other options, because you may want to look at those and not just automatically go for this, join the group plan, and then just be done with it. So that's option one. Option two is a plan from the ACA marketplace, also known as Obamacare, also known as healthcare.gov, marketplace, exchange. Those are all the terms that mean the same thing. And what this is, it is a marketplace for individual health insurance plans that the federal government looks over. And sometimes it's at the state level, but for the most part, it's federally regulated. That is all ACA plan or Obamacare means in this context. A lot of people think, and I'm not blaming anybody for this, but a lot of people think Obamacare means some sort of like welfare or handout, something like that. There are tax credits available based on your income, and we'll go into that. But there's nothing else about it that is like, government assistance or anything like that. It is real deal health insurance. So there's kind of a stigma attached to it still. The rollout of this was pretty rough about 10 years ago, but the market stabilized quite a bit since then. And these plans are very solid for what they are. So why should you consider this option? If you qualify for some sort of tax credit based on your household income, this is something to look into. So what I've got on my screen here is you can go to healthcare.gov to do this, but you can also use a third-party platform, which I prefer and what I use. It's called Health Sherpa. I've got the link in the description here. This is just branded with my information. I'm tied to it as a broker, but it's all the same. So this is what you'll see if you click that link. You don't have to put in any personal information, just a zip code. I'm going to put in my zip code. So what we're going to do is just use a hypothetical example and see if we qualify for any sort of premium tax credit. And if we do, and if it's substantial enough, then hey, let's move forward and maybe this is the way for me to get, or my family to get, health insurance. So let's say we've got a couple that's 35 and they've got two kids. Okay. This is all pretty self-explanatory. So dependent means child in most cases. So let's say there's like a 5-year-old and a 3-year-old. Okay, and so we will click continue. And then it took the amount of people I put in there, and then just confirmed how many people are in your tax household. So when you file taxes, that's really the number to use. It's usually the same as, if you got a spouse and 2 kids and it's you, it's usually 4, right? But if yours is different, then adjust this. What is your household income? This is the most important input for obvious reasons. It's an estimate. It's not. It will be trued up at tax time if you go forward with this. But let's just, for the sake of the argument here, let's type in 100,000, and this is modified adjusted gross income. Excuse me. That's the number to use. We'll click continue, and it looks like in this example, it's spitting out just under $950 a month in. The casual term is subsidy, but it is really a tax credit. It's an advanced tax credit that you get ahead of time per month. So that's pretty healthy. So let me increase this a little bit just to show you. Let's say it's let's go to 200 a year. $91 a month. So even at 200 grand a year for a family of 4, for this zip code, those ages, we've got still something to work with. So what I should say before I go any further is, if you are able to get group health insurance from your spouse's work, then you may not qualify for this subsidy. It's all based on affordability standards, and that's a little too in depth for what I'm covering in this video. But just keep that in mind. So let's say you've got some sort of subsidy here. Take a look at the market. You can click continue and go through here. I'm not going to do that in this video, but if you do get some sort of subsidy, an ACA plan is probably the right move. If your income is too high to qualify for a subsidy, there is another option, which is option 3, and I can't show you specifics here, but I'll just talk about it generally. So there was a market response, let's say, there are a lot of people out there who are self-employed who make a lot of money, who wouldn't qualify for a subsidy. And they could go on the ACA marketplace and buy a plan, but if they're paying full price, then they were kind of left with a lot to be desired. Most plans on the ACA marketplace are not PPOs, so they're smaller local networks. They wanted to be able to have a broader network, and they were willing to pay for that. So there are a handful of small insurance companies that were created, and you most definitely have not heard of them. Basically, what they did is they created an ACA clone, a clone of the basic protections of every plan that's sold on the healthcare.gov marketplace, of every plan that is ACA compliant that a group or employer sells. The basic protections like preventive services are covered 100%, like an annual physical, no benefit maximum. So even if you have a $3 million hospital claim, they can't cap you at any amount for the benefits that you reap, as long as it's covered. Stuff like that, but with a PPO network. And the pricing is, it's not cheap, but it is in many cases more attractive than paying full price on the ACA marketplace. So starting at $450 to $500 a month for a single coverage for someone in great health, just to give you a ballpark. So the one thing about these is you have to qualify. You have to answer health questions. There is some medical underwriting, but if you're reasonably healthy, it shouldn't be an issue, and they'll extend you coverage or an offer for coverage, and you can join that. It's kind of a pseudo group, but they allow individuals to join on an application basis. So those can be those are a great option, and in many cases a better option than an ACA plan if you don't qualify for any subsidies. Beyond that, any other option that you see is going to be what I would deem, categorically not comprehensive health insurance. So it's going to be something like an indemnity plan, which basically means there are a handful of services that are pretty common, like doctor's office visits, X-rays, stuff kind of like that, where a plan would pay you back a certain dollar amount if you were to, go use any of those services. And there are benefit maximums, and they'll stop paying after a certain amount. I don't I don't deal with those types of plans. I'm not discounting them or anything, but I believe in and I prefer comprehensive health insurance, and that's why I focus on that. But there are those options out there. Just be aware if you hear anything that seems too good to be true outside of what I described here. That's what it is. There are limitations. There may be $1 million lifetime maximum in benefits, or even much less than that. So anyway, that's just a real casual, real quick and dirty overview of self-employed health insurance options. Hope that was helpful. Let me know what you think in the comments if I can elaborate on any of this more, and I'll see you in the next video.